we have the guests joining us on the show. Sandip, let me start by asking you about the pharma sector itself. I know it's a little too quick to perhaps comment on Cipla's numbers, but the rest of the majors that announced numbers, post that, would your view change on pharma in any way?
We are seeing from the pharma sector results is that the margins seem to be peaking out, and the outperformance which was seen over the last several quarters, which led to the stocks doing very well as the sector was as it is underperforming, underowned, uh, is now getting over. So I think the big outperformance which we saw from various pharma company stocks, I think that could be getting over now.
Okay, point taken. Let me actually take it across to Naresh as well and get a sense on the pharma stocks and the chart check going. Naresh, what's your view on Cipla, for instance, and the other pharma majors?
So the trend is not strong, but we are not seeing a major correction also across the board. So it's a consolidation in a lot of pharma names. Cipla has gone up massively over the last 1 year, say from 900 to all the way up to 1500 slowly and steadily. For now, 1250, 1300 is a strong support. So not expecting that to break. And on the upside, 1450 remains a resistance. So could remain in this tight band for quite some time. Same is the case with the Dr. Reddy's, which has been struggling, not able to cross 6500 and 5800, 6000 on the downside. So overall, looks like a consolidation for the whole pharma pack.
Okay. In the meantime, while we await some more geographical breakup from Cipla's management, while of course the stock has given up all of its gains, we're now drifting in the red as we speak right now. It has been quite heavy this entire week for the markets. Sandip, what is it that you're making of the market construct right now? What are we headed in for up until the election outcome?
I think what's happening is that markets have corrected and people are correlating it to what might happen in the election. I don't think that's the right way to do it. I think markets fall under their own weight when they become overweight. So I think they became overweight, so they are correcting a bit. And I think this is happening in the midst of a very strong global construct where we've seen European markets move to new all-time highs, Chinese markets do very well. And there seems to be some shift of money of foreign investors out of India into China and other geographies also because of the outperformance India has done. Now, this could continue for some more time, and I think that will create an opportunity to buy. I'm not so worried about the political construct as such.
So how is it, Sandeep, that you keep your portfolio protected from any which way the political wave may move? And what is it that you would be shopping for?
Then, so you have to make a view. If you think that this government is not coming back, then you should go on to 50% cash and hold that cash and invest whenever the market falls because long-term growth of India is a given and it will happen. And I think there will be some derating which will play out and then the markets will recover again. But that is not my base case. My base case is continuity. And to that extent, uh, we would be more near 12 to 15% cash and waiting to buy into stocks and sectors which we think would offer outperformance potential over the next 1 year. I think that's how I would play it.
Taken actually supplies down now 4% from the day's high. Let's take it across to the management. Mr. Umang Vora, the managing director, is addressing the media.
We continue to be recognized as a great place to work, recognitions on the ESG side. I think one of the bigger pivots that we are working on is how does Cipla become more innovative, more digitally agile as we craft our journey going forward. I'd like to thank every single employee of Cipla and all our partners and everyone else who's a big supporter for what we've been able to achieve in the last year. It's been truly inspirational and an honor to work alongside some remarkable individuals. I'll quickly go to the quarter. Like every year, quarter four is always a seasonally weak quarter for India. And if you look at our One India business, I think there are two factors that have contributed to One India and the way it's panned out. One is the regular seasonal variation. I think that's one thing that's happened. And the second is also the impact of the slowdown in the on our CHL business, which is not really significant, but is the same trend that we've seen on the FMCG side. So overall, One India reported 7% in the quarter growth, and within that, our RX and our generics business would have reported closer to 10%, between 9 to 10%, both combined together. And the CHL business had more tepid growth due to the wellness slowdown. But we're seeing signs of some of that bouncing back. I think we're seeing good demand triggers have come in with the weather pattern right now, especially for some franchisees like our oral rehydration drinks, etc. And I think CHL is starting off strong in the year. In US, we're ballpark in the middle of the range. We came in at 226 million after a very strong Q3 of 229, and we had guided in Q3 that, look, we do think 5 to 6 million is on account of year-end stocking, which is usual of the US trade. So we're ballpark in line with our targets there, and I think there's been very strong momentum. You know, we've crossed 900 million now in the US. This was a business that used to be sub 200 to 300 million till about 5 years back. So it's been a remarkable trajectory in the US. And we're looking forward to some new launches as they come into the US momentum. In Saga, we are now the number one prescription company in South Africa. Overall, we still come in with it as number 3 because of the lower amount of OTC in our portfolio, but we're working actively on that. The integration of Actor Pharmaceuticals, which we had acquired some time back, is actively under process, and hopefully the company will aim to gain ranks in the overall market. If we look at emerging markets in Europe, it was a good quarter for them, I think. And again, in Europe, we're looking forward to a significant number of launches. Hopefully that will come in this year. We see some volatility settling down in the emerging side of the world, and so I think that will contribute to overall increase in the trajectory in that business. Overall, I think good progress on our pipeline even this year. We're not disclosing names, but looking forward to receiving news about two significant first 2 files that happened in the last year. I think one of them may be surmised to be public. The other one is not yet public. And I think that shows the trajectory of the business as it's going forward. And most of these first 2 files are definitely 2 to 3 years out in the overall launch calendar, as would always be first 2 files, or 2 to 3 years out and beyond that, right? Let me put it that way. So I think the trajectory is strong. We're looking forward to our peptide launches, looking forward to remediation. We've just had an inspection in Kurkum. We've answered to Patal Ganga. Hoping that we will be re-audited soon in Goa, because I think the time has elapsed since the last inspection. There's good progress there, and of course, on the biological side of the business, we are crafting together and trying to bring together a fair amount of synergies across the platforms of mRNA, across the platforms of biosimilars, etc. So all of that is in progress. We're also actively looking at distribution in India, and especially to the last mile. And we are changing a little bit of the model on our generic side to create more synergies between RX and GX. And so I think that is an activity that will probably get over shortly. But overall, I think we're off to, we think that this is that we've had a good significant year in the past, and we hope to be also driving forward quite strongly in this year. So with
Back with closing trades right here in 80 now. Just revisiting what the closing trades are looking like. At least we're going to have a 22,000 close. That's assuming we stay put at this mark. Cipla, by the way, reacting quite sharply to its numbers. It fell quite a fair bit after spending the better part of today's trading session in the green, fell about 2% and now again has seen a 1.5% kind of recovery from the lows that we just made. BPCL still going strong after its numbers. Hero MotoCorp seeing nice tailwind, still holding up 2.5%. Eicher is looking good. There's Asian Paints, which has seen a recovery about 2.6% higher as we speak right now. Sandip, would you dabble at all in the paints segment? And given the kind of aberration we've seen with increased and heightened competition because of new players now entering the market, would you say that paints may not be the hottest sector right now to be in?
No, I think it's not. I believe most stocks in this sector need to fall 40 to 50% from the top for it to come into buy range, because you see the companies have reported weak numbers even without Grasim having made an entry. Now this year we'll see aggressive competition start from Grasim Paint, and the volume growth as it is not so much at this point of time. So when the growth has slowed down, at that time new aggressive competition coming in will create further pressure on the margins. I believe most analyst expectations are still too aggressive in terms of what earnings they can deliver. So it should be an avoid kind of sector.
Coming in on the paint segment for now. But Sandip, before we let you go, a quick word on the wires and cables industry. Polycab clearly surprised the street with that big beat. That stock was high by 10%. It's cooled off from the day's high. But still, RR Cable, Finelix Cables, a lot of these wires and cables company, even Havells for that matter. What would be your take or recommendation on this segment?
So there clearly is momentum here, and there are various companies. So Polycab had some issues related to corporate governance, so I would try to avoid this stock, although the reported numbers seem to be good. But at many points of time, their numbers have not matched with what the industry has been doing. So that's all I would say about Polycab. Ex of that, I think in the wire, cables, switchgear, durables, there seems to be reasonable momentum. So that's one segment of the market which seems to be recovering. And as such, based on valuations, most of the companies should do well.
Sandip, great to have you on the show. Apologies for that cut-in Cipla's management. I had to address that. We'll chat again next week.
If you like this video, then like, share and subscribe to ET Now.